Hello.
Hey everybody, how we doing? Hope everybody's staying sanitized out there. And now I know, like they say, that TV adds like 15 pounds. So that's probably why I look a little bit heavier. It has nothing to do with my eating and drinking habits over the last couple of weeks. I just want to make that clear. It's really all just the cameras. Anyway, well, we appreciate you joining us. Obviously, we have some very, hot topics to talk about with some of these government programs that are out there, the CARES Act and economic injury disaster loans and all of these types of things. Literally, information is coming and being made available to us by the hour. We had a presentation yesterday, a webinar that we felt was very well received, and it was informative, and we were all prepared for today, all warmed up from yesterday's webinar. And then, first thing this morning, there have been new changes that have come out from the SBA. They're finding some of their directives and the final application. And so there are a lot of last minute changes. And so we're going to get into some of those. But literally things are unfolding by the hour, and we're just here trying to do our best to keep you informed of how to take advantage of these programs and what is involved in doing so.
On a technical note, if you want to, you can right-click on our video feed and hit pin video, and that will put ours as the main video. Then it won't switch to any others, or if yours is the main one, it should put ours as the main video, and we'll be sharing some PowerPoint slides as we go through each of the programs. It'll just avoid it switching to others. So that, again, is to right click on the video of us and pin it. So, okay. Yeah, thanks again for joining us today. I know that the current situation's definitely pushed us to think in a lot of new and different ways. This is actually our second webinar ever. Our first webinar was yesterday. This was something we talked about earlier in the week. We had so many questions. And our marketing director said, you guys should think about doing a webinar. And we had to start thinking very quickly, do we have the equipment we need to? And it's something we've talked about longer term, but had never done. So we happened to have just got a new camera for the conference room and kind of cobbled things together so that we could do this and get as much information out to help as many people as possible, really focusing on our clients here to help them through this difficult time. So. As Jim said, we hope everyone and their loved ones are staying healthy. Over the past 2 weeks, we've seen really an unprecedented amount of legislation regarding small businesses in an effort to support the American economy through this pandemic. And much of it's being legislated through the small businesses. There's a little bit now that's going directly or supposed to go directly to individuals, to those American taxpayers directly. And we've been studying this legislation as it comes out and trying to interpret it and waiting on the official rules from the SBA and the government on how to apply for it, and now working with the banks, who are kind of the frontline people to apply for this new paycheck protection loan.
Let me add too, there's a lot of inconsistency out there in what's being told to us by the SBA, what the banks are saying, what we've originally interpreted that was actually in the act itself. And so sorting through all of it and trying to, figure out where some of the common language is. So there are things that we're certain about, and then there are other areas that are inconsistent. So, we're just trying to then fill in the blanks where those exist. And ultimately, it's the SBA that is really taking the lead on this. So at the end of the day, it's really whatever they say is going to dictate how the programs unfold.
Yes, and we were talking about this with the Tax Cuts and Jobs Act a couple years ago now, that they put through. That comes into law, and then the IRS has to issue their official guidance on how to apply it. And that's really been condensed in this case to like 5 days, where the act comes out and then the SBA is determining how to apply it, trying to create forms so that they can get this to the taxpayer. So there's a lot of uncertainty. We're trying to get people as prepared as possible so that when it is live and people can do it, then it's as quick as possible. So with that, we can kind of move into it here onto our slides. Anybody that's joining us a little late, again, if you right click on our box and hit pin it, it will put ours as the main box in your Zoom feed there. So
you want to start with the Paycheck Protection Program? It's probably a good place to start. In our opinion, we think, I mean, this still is the front runner.
Yes. Yes. Let me share the slides here real quick. There we go. Okay, so the PPP, the Paycheck Protection Program, these funds are on a first come, first served basis. This came out last Friday, so about a week ago now. And they were promising at that point that it would come out by today. We'll talk a little bit more about that, but the basis for this is 2.5 times your monthly payroll. And in the final stuff we've seen this morning, they're saying, generally based on your 2019 payroll costs. There was some question as to whether it would be the 12 months leading up to right now or last year. It looks like it's going to be generally based on 2019. There are some things, if you're seasonal or if you're a new business that just started this year, that you can use different periods. But that is the basic one there. It's also, at the end of this one, the reason this one is the front runner is because it is fully forgivable if you use it for the allowable costs. Mm-hmm. Those allowable costs are payroll, mortgage interest, not principal, just making that clear, rent. So if you're paying rent, and then utilities. So if you use those, the loan is forgiven, and that forgiveness is not included in taxable income.
There were a lot of questions we've had, in terms of, well, if this is, a cancellation of debt event, would that be considered federally taxable income? We did confirm that it is in fact not considered federally taxable. However, Illinois has been silent on it. So we don't really know what Illinois' plans are. We'd like to think that they would follow suit, I should say. And, but there have been, several cases during all of this development where Illinois has not followed suit with federal. For example, on the due date of the Q1 2020 estimated tax payments, the federal government has extended that date to July 15th, but Illinois is still requiring their estimate to be paid on April 15th. So, we just don't know how Illinois is going to treat this, but even so, I mean, I think if it's largely forgiven and Illinois does ask for some tax on it, it certainly still makes sense to pursue.
Correct, yes. So yeah, as it says, the 2.5 months of payroll, so the max loan amount is really based on that 10 weeks of payroll. And we're saying there that it may not be forgiven if you take the full amount. From what we understand now, the full amount can be forgiven if you use it on these allowable costs. So if you get to that full amount on these allowable costs, then the full amount of that loan can be forgiven. 75% of it has to be used on payroll, but the total principal may be forgiven at the end. So we've got to update our slide here, but that's, we hear different things from different banks, and it is a very confusing piece of legislation. So that's understandable, but the full amount can be forgiven if you're using it for those. There is a definition of what payroll costs are. So it's gross payroll for all your employees up to $100,000. So anybody over $100,000, you would just use that $100,000. And then your health insurance that the company pays. So you'd have to take out any employee amounts paid. And then your state and local taxes that the company pays. So pretty much your state unemployment, anything else there that the company has to pay.
And employer portion of retirement plan.
Yes,
contributions.
A match there. Like a
401k, simple IRA, these types of things. The employer's portion, not the employee's portion, but the employer's portion, you can also include in your payroll calculation. There was A lot of confusion. We have some clients, for example, that have a lot of independent contractors. And when our first interpretation of reading the act is, it said as part of their payroll costs would include independent contractors on a 1099 miscellaneous. So individuals who were essentially they call them contract employees or independent contractors. They have since clarified that language, in our opinion, to exclude independent contractors from your payroll calculation. So it is purely, those who are employees employed by your company.
Yeah, so we did find something on the SBA site today. It seems they said they're posting it early. It's like an interim final guidance. They said that basically your independent contractors should file for themselves for these, and the income that they generally receive would be their loan amount, kind of serving as their payroll. So in the act, it says payroll costs include payments to independent contractors, but their meaning on the independent contractor side is how they're interpreting that. And those independent contractors should go get it individually on their own basis. So that's
their own, right?
Just this morning, we're seeing that the new app came out this morning and some of that guidance. So we're finding that out, and we'll have to let people know that we talked to yesterday that has been clarified, and those would not be included. It's just the payroll costs for your employees and then the other costs that we talked about.
So only the federal government would be able to get away with using a term called interim final.
Yeah. Yes.
So this is probably the third interim final we've seen. So, but just highlighting a couple of things that that Lucas and I just.
I wanted to note another error here really quick. Yeah. Not even an error. This just changed today in the guidance they gave to the banks. They're changing the percentage rate for this to 1%.
Right.
Instead of 4%. So
the interest charge
just came this morning. The 4% is, I believe, in the act, and they're telling the banks this morning that it's now 1%. So
these the application was really a lot of these banks have been announcing that their online portal will be scheduled to be available actually today. In some of the banks that we've been talking to, and they are all very heavy involved in SBA lending, so they're very familiar with it. They are at the forefront of what the SBA is asking of them. Just this morning, they have changed the application. So the application to apply for the PPP loan has changed, and Lucas, I'm sure, will pull that up here. To show the new application. We have the old one in the PowerPoint because the new one just changed this morning. But originally, this was to be a very streamlined process. That's how it was being presented to the banks and to us, and that'd be 100% federal guarantee. The SBA is now putting much more responsibility on the banks during underwriting, asking them to verify the accuracy and the risk of not being, and also at the risk of not fully guaranteeing the loan, and putting some of that responsibility on the banks. And, as a bank, I'd be really nervous about that. This whole program has such a vulnerability for irregularities and fraud and all of these types of things that, the banks, unless they're absolutely comfortable with the customer they're working with, they may pump the brakes on this thing a little bit, which it really defeats the whole purpose of trying to get the money into people's hands that really need it. So some banks may actually opt out and decide not to do the PPP program. So I encourage you to stay in close communication with your banker, and if you're able to get through to them. The loan process, I've been told, will now take longer than originally expected. There was even word going around that, oh my gosh, same day funding and a couple of days funding. We've never seen that type of a streamlined process with banking ever. So we were a little, concerned about that, whether that would really happen. And, as more information is coming out, And with the SBA, I think putting more responsibility on banks, we could expect that process to be a little bit slower, maybe more requests for documentation, and being able to confirm that information sent is true and accurate. And Lucas is right, though. They did lower the interest rate from 4% to 1%, which is attractive if you can get the money, right? So anyway, just wanted to highlight some of those new things that came up this morning. So,
and one thing I wanted to note, our marketing director, I don't think I said this before, if you have questions, there is a chat feature in here, so please use the chat feature, and he will be feeding me those questions and we'll be addressing those as we go through. We'll kind of stop after each program or in the middle there and answer those questions as we go here. So he'll be, if there's duplicates, he'll be filtering through those and getting those to us. We'll try to address them as much as possible. And like yesterday, after we addressed a few that we didn't know within the program there. So please use that chat feature. And if you wanted to send something directly to him, it's David Rosenbrock that's on the call here somewhere in the members there. So, okay, the next slide was the app. So I'm actually going to switch over to the new app. I'll just share the screen here for that one specifically. Here we go. So yeah, this is,
that's the
lender application form.
I don't think this is the new one.
Revised. This is from the SBA site. This did not change again, did it? One second. It's just going to find the final one there.
Unless this one is changed again from the one we had this morning.
Looks like this is on the lender side. So 1 second.
Okay.
We'll go back to that. Let's look back at the PowerPoint real quick at some of the other pieces on this loan. So I'll share that while I look for that. Okay. So yeah, on the Paycheck Protection Program, there's no personal guarantees. I'm not sure if you said that. It's supposed to be underwritten by the government. There, no collateral. There's the allowable uses, salary people up to 100,000, no prepayment penalty, and then deferment of the payments. Did you talk about the roll-in of the EIDL? Did you?
No, I haven't really gotten to that yet. It's really hard to talk about these independent of one another, even though, we like to try to compartmentalize this so we can, because there's so much detail on each of these programs. But there is this other program that actually came out very early on, earlier on than the PPP loan, is the Economic Injury Disaster Loan. And it's a lot of times it's either referred to as the EIDL or it's referred to as the EIDL loan. But this program is also, you work directly with the SBA. So there's an online application that you fill out. Companies, again, applies to companies less than 500 employees. There are certain exceptions depending on what your NAICS code is, which is your industry code. It's your standard industry class. That there are certain companies and industry classes that they look at. They have exceptions to the size standards, so you could actually be more than 500 employees, but still qualify and meet the SBA's requirements. But generally, it's 500 employees. The maximum loan on the EIDL is a $2 million loan. And that last we've heard is set at 3.75% interest for 30 years. I'm now wondering if maybe that interest rate is going to change because the PPP loan rate went from 4% to 1%. But based on the latest information we have, the percentage on the EIDL loan is 3.75. There is an advance component. So let me first. So with this application, I have filled out several of these applications for clients. We also have done it, for our firm more so because I wanted to see how the process worked. And much to my surprise, it's been a very slow process. The application process has changed 3 times since over the last probably 10 to 14 days. They've changed it 3 times. In some cases, we've had to submit the application multiple times because it didn't take, or the system crashed. There were a lot of delays in being able to upload documents and all of this. So a lot of frustration on the applicant side with this, but but there is, what they did add there though, is toward the end of the EIDL application, there's a box that you could check to be considered for a $10,000 grant. This grant, they would consider you even if they did not consider you for the EIDL loan, or you weren't approved for the EIDL loan, you could still be approved for this $10,000 grant. That grant, they would say, is 100% forgivable, 100% forgivable, although when it ties into the PPP loan, it actually does look like it ends up where you have to pay it back. So it's a little bit of a shell game. We'll get into that in a second. So there's also been a lot of confusion about, okay, well, how much can I qualify for this EIDL loan? And really, they really state that the loan amount and the deferment of when the payments start and the terms of the loan and all of that are really at the SBA's discretion. So we are filling out these applications without really knowing what we're going to qualify for. I have heard from a few sources in the banking profession. Again, we haven't been able to verify this, and they haven't been able to verify it either. So they're really just giving us their best guess, which is always appreciated. But I've heard anywhere from 50% of your gross profit. So whatever your company's gross profit is, would be your possible maximum loan amount. But again, it is at the SBA's discretion. So to access the advance, you first apply for an EIDL loan and then request the advance. It doesn't need to be repaid, as I mentioned, and the money would need to be used to keep employees on payroll, to pay for sick leave, meet any increased production costs due to supply chain disruptions, accounts payable, paying any business obligations, including debts or rent or mortgage payments. So pretty broad use for the grant money, the $10,000 grant money, and the EIDL loan. So the proceeds can be used for, I think, really just working capital. If you receive, an EIDL loan or this emergency grant as a result of the COVID-19 between January 31 and June 30th, you can also apply for the PPP loan. You cannot use the EIDL loan money for the same thing as you use the PPP loan for. And so, again, using it for working capital, paying any fixed debts, paying vendors, suppliers, and you can also use that money to pay for employees that are outside of the PPP loan coverage. So, use it for future payroll, or maybe there are some employees that you're using the PPP money for, and then the other employees you can actually use the EIDL money for. So it's going to require some accounting and making sure that we're accounting for where all these funds are being used, and that we're not double dipping or using them for the same thing or trying to get credit for it.
Yeah, and that's been a point of confusion the whole time since the CARES Act came out Friday, as to whether you could use them both. And even today, we've heard mixed reviews as to whether you could use them both. And some people are saying that the EIDL loan will be refinanced into the Paycheck Protection Loan. We don't know of anybody, and I've heard of nobody that's gotten the EIDL loan. So I don't know how that would work if these actually get expedited, or if it would possibly disqualify for the EIDL loan. But I think in this case with companies, it's getting the the quickest money possible, and the Paycheck Protection Program is the forgivable amount. So that's
Right.
really the one to go for.
And
And I
with
did find the application, but
so on the new application, so we talked about calculating the average monthly payroll, and then it says then we take that number, multiply it by 2.5 times, and then it says plus the EIDL. Okay, net of the advance, and that advance is that $10,000. But the EIDL portion would get added to your 2.5 times average monthly payroll. But we have applications out there, but we have no idea what that loan amount is. Like, we haven't even gone through the SBA's due diligence process yet. It's at the discretion of the SBA. So it's like, well, how are we supposed to fill out this application? Some people are saying, well, if you've applied for the EIDL, you have to include it on here. Well, I think if in looking at the application, if you go down to item 4 or question 4 down here, it says, has the applicant received an SBA EIDL loan between January 31 and today? So I think any applications that are out there we do not have to include that. So, I guess we have to wait just to see. I mean, the EIDL loan application process, I've heard, could be 2 months, 3 months, even longer. So, we kind of have to just, I think, take, the opportunities that make the most sense for us sooner rather than later, and just see what happens with the EIDL loan. But
Yeah.
It certainly doesn't hurt to complete the application and submit it, and see where it falls out, because I'm not crystal clear that really the SBA or anyone really knows how this process is going to unfold. And if you ask the bank about the EIDL loan, they're going to completely abdicate any responsibility, because it is considered a quote unquote streamlined loan directly with the SBA, which literally is like sucking a rock through a straw. So
yeah, and I totally understand their hesitation with the PPP loans, because the act said that it was going to be fully government guaranteed. And at this point, there is a question about how do you verify the information that you're getting from these companies, because the IRS is, for all intents and purposes, closed down right now. All their taxpayer service centers are closed down. So even if you have 941s or 940s, there's no way to confirm that those amounts match anything that was filed, and that they weren't totally made up. So the banks are going to be on the hook for somehow verifying information that really has no way to be verified, and on the same day, which is a little crazy. So yeah, there's a lot of uncertainty there. And in fact, when I was pulling up this application, I think some of the news sources here I think you can see this as the shared item. If you can't, let me make sure you can see this real quick. These are just from this morning, and this is what we've been kind of dealing with is every day really, and really by the hour. These are within the last 24 hours. Uncertainty surrounds the Paycheck Protection Program that debuts Friday. This is from Fortune. It's going to be a mess. What small businesses applying to the SBA Paycheck Protection Program need to know. And if you've looked on the internet, you see tons of these kinds of articles, and we get calls about all of them. And, oh, I just saw that I need this. And we're like, we haven't seen that at all. That we need our 2019 filed to get it. And actually, they're only asking for payroll information. They aren't even asking for any tax returns for this one. So a lot of misinformation or half information. And, it's like a 800-900 page original act that I think has been just single spaced now into 400 pages. So a lot to figure out, and really it's all in the interpretation by the SBA. So yeah, we looked at the app here, right, for the SBA. Yeah. Is there anything else on there? Yeah,
it's really a straightforward application. So, they're going to ask questions to make sure that, you're not delinquent in any other, federally backed loans, or that, you haven't been convicted of a felony or that sort of thing. They really focus too on any 20% or more percent owner of a company. So if you have any other shareholders that are under 20%, they're really not, at this point, they're not really need to consider them. So it really applies to 20% or more. So there are just some certification questions that you have to answer, that you're a U.S. resident, U.S. citizen, and you haven't been convicted of a felony and all of that. So pretty straightforward questions. I think most of them are going to be, you're going to answer them, pretty easily.
I did have a question about number 3 today, which was, that the applicant, if they have common management with any other businesses. I looked in the act, it doesn't say that, like, if you're paying rent to another business that you own as well, that rent is not an allowable cost. So we're not sure what they're using this for, except, I'm sure they want to make sure it's at market rates and that you don't just decide to start paying another company to get those payroll costs or allowable costs up.
On the EIDL loan application, my understanding that where they're asking for, you have to disclose, they refer to what are called affiliates. So any businesses that are under common control of the owner need to be considered. And it's mainly, I think, too, to ensure that they're meeting the 500 or fewer employees, that you don't have, this entity over here with 250 and then this one over here with 300, so that you can, separate them and then they both fall within the, the SBA's guidelines in terms of size. But I think too, though, that, when you're looking at, for the purposes of this application, I would think that you would use the payroll. Would you use the payroll for all of the entities that are under common control, or just for the specific entity that you're applying for?
I want to say it's under common control.
Does the application call for a federal ID number? I think it does. It does ask for a federal ID number. So, but I think that if it's under common control, you would want to include all of the employees from all of the entities, and then it's going to be really on the applicant's, the responsibility is going to fall on the applicant to make sure that they, have all the supporting documentation that goes into what the average monthly payroll is.
Yes. I think what they'd be looking for here is if somebody got a loan for this to pay rent to a related entity, but also on that related entity applied for the EIDL loan for lost rent.
Right.
Which, again, this loan is really for a short 8-week period. So the question is, how long is this going to go? The EIDL loan can be for periods after that. And that's really how it's documented, and what is put on the back end of what those expenses were used for is probably going to be the bigger reconciliation. We're just trying to get people in a good place to get some money right now. So anything else here? Don't be a felon, hopefully. U.S. residents. And then there's a bunch of stuff. What we did notice on here, and where we're using just as a clarification of a few things, is that not more than 25% of the forgiven amount may be for non-payroll costs. Honestly, if you're going to meet the forgiveness rules, which are that you keep the same number of FTEs and that you don't reduce their salaries by more than 25%, I believe, you'd have a hard time not having this be the case, because those other allowable costs are not, I wouldn't think, be that much of a percentage of your costs.
And it's largely a payroll-driven loan determination.
Exactly.
So, you're obviously going to have most of your costs are going to be payroll to meet that obligation.
Correct. And then here we go, the calculation. So this is where and again, this is the SBA loan or application final that came out today. It's actually, they had said it was final yesterday. This is the final. That most applicants will use the average monthly payroll for 2019, excluding costs over $100,000 on an annualized basis for each employee. For seasonal businesses, you may use February 15th to June 30th, excluding costs again over $100,000.
It's making the assumption that you're seasonal at that time.
Yeah, I mean, a lot of companies
It's a lot
become
of business.
seasonal in the spring, summer, so that's
Yeah.
still going to include
So
their biggest payrolls.
We
So-
don't really understand what that means, that they're not allowing the applicant to choose when their season is, because a lot of
Correct.
businesses, if you're in retail, for example, your season could be, over Christmas time,
Yes, so I would say you calculate both of them and see which one comes out higher. On an annualized basis, new businesses, so if you just started like at the end of 19 or beginning of 20, you can use this January 20 to February 29th, 2020 to calculate your monthly payroll. So that's what they've got in there for that. But again, in here, they make no mention of payments to independent contractors. They only list that under a separate section for sole proprietors, partnerships, those type of things. So that is the app for the Paycheck Protection Loan.
Again, the application is very straightforward. It's mind-boggling to think it's so complicated to administer when the form is so simple.
Correct. Yeah, there's yesterday's application. You can see it changed a little bit there. Information needed. So yesterday we said the 12 months leading up to loan closing. Now the app is saying, generally 2019. The base period where they're going to determine the loan forgiveness is that February 15th to 4/30, unless of course you weren't in business during that time. And again, if you're keeping the same number of FTEs and keeping the salary at similar levels, not going less than 25%. And I believe there's a percentage decrease for the number of decrease in FTEs or that salary that they would pull off of the forgiveness amount. And then every bank I've seen so far is asking for the 941s that were filed for 2019. We have the 2018-19 tax return or financials, but honestly, I haven't seen that in the SBA's final guidance. So that's usually something that banks always ask for. So we've kind of put it there by default, and a lot of banks have, but that doesn't look like it's going to be expected at this point. And then the articles of incorporation bylaws, again, I think that was an attempt by the banks to say, hey, this is how we're going to confirm that it's a real business. Not sure of the status of that, and some of them I haven't seen that on there anymore. It's just the payroll details. So,
and I mean, we don't have it here in the presentation, but there's going to be the whole next phase of this thing is going to be verifying that the costs incurred were actual costs to reduce that loan amount. And so all we can tell you at this point is keep really accurate payroll records, keep, accurate, all of your employer's health insurance costs, and any, consider, for example, if you have an employer sponsored plan, you might want to calculate, what that accrued, employer's, retirement plan contribution is going to be, and then pay a portion of the 2020 accrued employer's retirement plan contribution in during your 8-week period, because from what we understand that would count, right? And so then when you get to the next end of the year, you would just have only a partial accrual for the balance. And then also, keeping track of your state unemployment taxes, that those are paid, and your rent, any utilities costs. So you just want to keep good, tight records on what you're spending the money on, because that is what's going to be used to reduce that, to essentially forgive the loan portion. And then the balance would be a loan.
Yeah, absolutely. I've got a few questions here I'm going to address. Vicki, I think I saw this question this morning. Sorry, I didn't get to your email, but I'm glad it's here. You're asking about related to nonprofit salaries. If you have staff funded by a grant, would their salaries need to be deducted from the average monthly payroll amount? We can check on that. So David, don't mark that question off. I'll check on that. I'm thinking it wouldn't need to be deducted, because most of a nonprofit stuff come from grants or contributions that they get, like that's part of your income. So I think that that will probably be included, but we can look at that in the act and see if they're excluding salaries that are funded, like if it's federally funded or something, that you're still getting that funding for. We've got a question here. Should we go to the bank and apply today? Ask your bank. Many of them have portals set up, and some of them, we've seen some banks that are taking applications, but they're really taking them just to queue them up. And a lot of banks are telling us they're backing off and they're waiting because in the last 24 hours, the SBA has put more of the onus on them. So they're not really happy about that, and they want to get more info. And so you got to talk to your bank about that. A similar question here is that not seeing where you submit the app on the form. It's to your banker, whoever your banking relationship is who you submit the app to. And then that other form I brought up first was the lender application. So they submit all your data to the SBA. It sounds like they're approving it, and then they submit that all to the SBA.
I think there's going to be a lot of pressure on these banks amongst one another, because there may be some banks that are more willing to take on a little bit of risk and sort of push the application process along without having a lot of these items fully clarified by the SBA. And then others, like I've talked to some, really big SBA lenders, and they're like, look, we don't want to roll this thing out half-baked and all this. So they're going to pump the brakes on it, at least it's, for a couple days, or a day or two, until they see, some clarification from the SBA in terms of what the guarantees are, what documentation is going to be needed. These banks, from what I hear, they're getting like $500 an application. So now they're looking at this. It's an economic issue for them too, because if they're now required to do a lot of the underwriting and all of this, streamlined is one thing, administering the funds. Okay, they complete the application, here's the money, and then they collect their money from the SBA. But now they have to actually perform, I think, a portion, if not all, the due diligence, verifying that the businesses exist and that the payroll tax returns are legit, and all of that. I think there's going to be some banks might get to it, roll it out quicker than other banks. It doesn't necessarily mean that one bank is better than the other. Matter of fact, I'd rather have where we're extra certain. According to Mnuchin, he said there will be plenty of money. Whatever that means, there'll be plenty of money. So, we're hopeful that
they've got the printing presses going.
Yeah.
The Act says what, 349 billion?
Right.
That's out there. We've heard that, once it gets going, it could be gone in 2 weeks. I don't know if they would extend that, though. We have heard there are, CARES Act 2 in process for coming out, as you've seen some of the unemployment rates coming out now. But the other thing there is just with the banks and the applications, them having the forms is the first part, but they've got to verify that. And like Jim was saying, if the onus is going to be more on them, then they're going to want to check into it more and make sure that they're making good loans. So waiting to hear more on that. I do have a question here. Is there guidance on how FTEs are calculated? This was a question yesterday, and I looked it up, and I could not find anything in the Act about what defined an FTE. Somebody asked if it was 30 hours or 40 hours. Maybe there's a DOL, Department of Labor regulation or something out there that defines that. When they do the calculation, as long as they're doing it using the same hours for the base period and the period that you're paying the payroll, it'll come out right, however that works. But I think there's a question on there for how many FTEs you have. So knowing what that is would be helpful. And we haven't got any guidance on that I have seen. So I'd have to look a little bit more through the application to see if they define that separately. So a lot flying at us here. So, okay. But yeah, the last slide we had there was just that, we feel that this is the best program right now. If you have employees working or need them on payroll and you're organized, clean accounting and financials so that you can justify those costs and give a good accounting of them for those 8 weeks after you get the loan, and that it's forgivable with certain limitations. So, okay, let me share the slide deck again. And I've got to most of those. So as we said, put your questions in the chat. You guys are doing that. David is giving those. Oh, I see I did miss a question up at the top here from one of our clients. Have you found out any more about giving raises to employees or owners? We haven't seen anything specific about the employees. We can look a little bit more into that. Except that if somebody's over, I believe it's
Executive comp.
Yeah, executive comp for people that are over 425. Okay. So if somebody's over 425,000, they aren't allowed to have a raise, I think, for the year after they get this loan.
Mm-hmm.
So that, yeah, there's a period. I don't think that applies to a lot of our clients, and they don't really define comp, but it looks like it's probably W-2 wages.
Right, and not K1 income.
Correct. It did not say K1 income or business income. It said wages there. So it will note if that makes, if that anything else comes out on that, but we haven't seen that. What it says about the forgiveness is just that you can't reduce wages by more than 25%. For those employees.
But I think as long as you're under 425 and, you know, you have employees that you have bonus structure and you give them pay increases or whatever, right? The act does not say that you cannot do that. You can give them, you can give your employees raises. You can pay bonuses to your employees. But there are different rules if you're over 425,000 in compensation. There are some limitations there in terms of rate increases and such.
Yes. Yes. One other question here, which is relevant. If there's recommended local and national banks to work with who are experienced with the SBA or the most experienced. The SBA on its website, and actually let me switch over because I did save this site, that I think they have a lender matching tool. We've got a few banking contacts. If somebody wants to contact us of SBA banks that we're aware of, and I think right now it's only current qualified SBA banks that are doing this, and then they're supposed to be qualifying more banks as we go. Let me see.
Whenever we're making recommendations on bankers to work with, I mean, we like to consider, kind of the individual's needs, their business's needs, their business size, sort of relationship fit, who we think would be the right, because bankers are every banker's a little different in terms of their style, how we work with them. So we kind of like to customize that so that we're making the right recommendation for the right person.
Yeah, exactly. The size of business they work with and work with best.
By all means, reach out to me or to Lucas, and I would be more than happy to share, some of my relationships with you, and we'd just like to have a discussion about it first.
Yeah. And this is on the SBA.gov website, funding programs, coronavirus relief options, should be pretty easy to get to from the homepage. That's how I got here. Takes you into this. And then they've got kind of all these, which we're going to touch on all these in this presentation. We talked about the paycheck protection loans. That takes you into here. The EIDL advance, Jim talked about a little bit with
they are two separate things. Okay, so the EIDL loan is up to $2 million, right? And it's at the SBA's discretion based on your need and based on your also your ability to pay. So there's a creditworthiness process that you have to go through and all that. The $10,000 advance is more of like a grant where it's like, hey, we want to get some quick $10,000 into this person's hands. A lot of businesses, in certain cases, if you have 15, 20 employees or 50 employees, it's like, we've been kind of telling clients as we applied for that to just forego that $10,000 advance because we weren't 100% certain how that would impact their ability with some of the other programs. It does sound like that $10,000 advance does come into play with the PPP loan. And at the end of the day, it's sort of, you end up having to pay it back anyway if you do the PPP loan. So I've been, advising clients that we just opt out of that $10,000 advance. But I mean, if you're really in need of the money, by all means, complete the EIDL loan application and check that box on there that says you want to be considered for the $10,000 grant. I'd be, totally do that. But, in a lot of our cases, we've opted not to do it because at the end, it is getting them to the same place.
Yes, yes. Interestingly, I don't see the actual EIDL loan on here.
Yeah, I don't either. It seems like there's been some talk where they really want to refinance any of the existing EIDL loans and roll them into this PPP program. So that's what a lot of the language is on the new application.
That is what
but I just don't know, honestly, to Lucas's point, we haven't heard any word at all that anyone that's even gotten close to final approval on an EIDL loan.
Correct.
I probably have a half a dozen applications out there right now where I'm lucky to have gotten a confirmation that they actually received the application. So I don't know how much that's really going to apply to many people applying for the PPP loan right now because.
Correct, and that's very odd because the EIDL loan was a 30-year loan at, I believe, 3.75%, and the PPP loan is a 10-year loan if you don't have it forgiven at 1%. So obviously the interest rate's a little better, but that's a lot shorter term. So not real clear what they're doing there, and the bankers we've talked to are getting some different news now from that too, that the EIDL loan may be refinanced into these. So a lot of uncertainty in those areas. Okay, so I think, let me go back to our slides here. And okay, so we talked some about the economic injury disaster loans. Let me actually put this on presentation mode. I think I will have to do this. There we go. I think you kind of went through this, right, Jim? But this is the slide on it. 2 million was supposed to be 3.75 for 30 years.
Yeah.
And I will say, we looked at that SBA website. We haven't heard of anyone getting any money yet for any of these programs. As Jim said, the loan application on the SBA side over the last 2 weeks has changed at least 3 times. Mm-hmm. I think Jim's filled out at least those 3 iterations each time, and it's not clear if they're in process on a lot of them because the new application, you can't really go back and see if it's in their system anymore. Mm-hmm. Like originally you set up an account and you could go back into your account and check the process, but now you just go through it and it goes off into SBA land. So yeah, federal government underwriting, SBA standards, loan amount, we're not sure on exactly, and maybe used to pay those expenses. Information needed is a little more intense than the PPP loans because they're really underwriting this.
And there is you're guaranteeing this. You have to do a personal guarantee on these EIDL loans. So, the loan amount could in fact be bigger, but they do require personal guarantees. It's like literally applying for an SBA loan. So they're gonna ask for a personal financial statement. They're gonna ask for a detailed list of all of your the company's liabilities, any debt, term loans, credit cards, balances, and payments, and all of that. They're going to ask for what is called a 4506. Maybe many of you have heard of those. When you're applying for a mortgage, you have to fill out a 4506. And that's basically giving the SBA the permission to access the IRS to get actual copies of your tax returns that were filed, so they can confirm that what you're giving the SBA is actually what was filed with the IRS. You know, they ask, you know, a lot of personal information, you know, obviously social security number, dates of birth. They actually ask the place of birth, where you were born. They also want to know any affiliated businesses and that sort of thing. So it's a little more of, now, at the end, they're going to add, that was the first application. The first application actually asked for all of these things up front, and you had to sign them all and upload them. And so it was a much more comprehensive initial application process. That was probably taking around 5 to 6 hours. It took me about 5 to 6 hours to complete it. The second one was much more streamlined, actually too streamlined. They didn't ask for really virtually any information at all. Then you just print out the original, it's called a Form 5, and you print that out, sign it, and then upload it. And then that, you know, that document, there was no notification that it was received or anything. And then the third one, you go through, and again, it was streamlined, did not ask for a lot of this additional information, which leads me to believe that later on, like once you complete the application now, that there is going to be all of this other documentation that you're going to need to provide later, that the first generation application process requested all up front. So, and from what I've heard, they're getting something like 300,000 applications for this EIDL loan a day. So, you know, we've had some where we've completed them almost a week ago, and we have heard no word or anything on the status of the loan.
Correct.
At least when I did mine about 10 days ago, I was notified that they received it, and then I was notified that it went into review. But I have yet to hear anything more on that. And for the others that we have done subsequent to that, I've heard no word whatsoever.
Correct. Yeah, one of the first ones that I know that filled it out was one of our restaurant clients that has about 5 locations in the area. And his initial one, and I'm not sure if it was from a direct call or just from the app at that time, was what we put on here, that it seemed like it was going to be 50% of the gross profit that they were using as a benchmark for the loan. And then I know based on the requests he was giving me later, that they were asking for additional interim information for the company. For 2019, he had submitted 2018 tax returns, and they were asking for the interim financials. So there seemed to at that point be more communication, but now it's become somewhat of a black box of we don't know. And I'm, sure that they're inundated with these applications. Yeah, and having worked with the government and the IRS and all this for a long time, that doesn't seem like it bodes well for getting money quickly. So hopefully they figure something out to
So that's what we're saying. You just push through with this PPP loan, try to get whatever you can with that, so that we get some, you know, it's going to be the soonest relief available, in my opinion. Right. So you go through, you get that process, you can, you know, apply for the EIDL loan and see where that takes you. But that's probably going to be a little bit farther down the road.
Yep. A couple quick questions here. What about new employees hired this year? So that's great. The max of the loan is going to be based off, if you were in business in 2019, the monthly payroll for 19, and then basically you're going to hit that forgivable amount quicker, but a new employee hired this year is not going to be able to increase the max amount of the loan.
Yeah, that's true. Right? I mean, they don't match up to say, okay, was this employee with you last year, and is that same employee with you this year? I don't think they're necessarily looking at that, just that the number of employees are the same and the total payroll is the same.
Correct.
Right. Correct. So, and if you're growing, it should be, and, you know, a lot of people, you know, from 2019 up until just prior to, you know, this crisis hitting, you know, businesses were growing. So yes. It may, you know, last year may be an easier hurdle to get over with your, you know, with your payroll this year. So, but it doesn't have to be the same employee. So. Correct.
And it may mean that you can cut back if you're not quite as robust on services right now and still meet the forgivable amounts on that loan. So I have one here. You mentioned that the EDL intended use must be different from the PPP. This is a big point of confusion. They are both to cover payroll and company expenses. Can you give some examples? So on that, the PPP is for that, and there's some confusion here. It says the 8 weeks after you get the loan. And I sent out a clarification last night because we said that time period ends on June 30th, regardless of when you get the loan. In the act, there's 2 different covered periods that are defined, and one ends June 30th. One says 8 weeks after the loan. They're clearly 2 different ones because one starts on February 15th and ends June 30th, which is 10 weeks, and the other one says it's 8 weeks from you get the loan. So, but we saw another thing from a bank today that said, no, you have to spend the money by June 30th, which
on the PPP.
Yeah, on the PPP, which is odd because you're supposed to be able to get these loans through June 30th. So if you got one on June 29th, it'd be very difficult to spend that money in the next day.
Key is, spend the PPP money on all your payroll for the 8 weeks following you getting the loan, right? Spend it on your health insurance for your employees, for retirement plan benefits that the employer pays, for your SUTA tax, for your rent, and for your utilities. Use all that money for that. The EIDL loan, used for working capital. Get caught up on vendors, suppliers, accounts payable, or even payroll beyond that 8 week period.
Exactly.
You can use it for that, but you can't get credit for utilizing that money for the same employee during the same period of time or for the same cost. You could, I think you could even use that EIDL loan and you could pay, down, you could pay like mortgage loan payments.
Yes, I believe so.
So like debt, you could, apply it toward debt. You could use it. Let me see. I actually have it right here. Okay. Can be used to keep employees on payroll, to pay for sick leave, meet increased production costs due to supply chain disruptions, accounts payable, or pay other business obligations, including debts, rent, and mortgage payments. So yeah, like I'm wondering if you could use it for the principal portion.
Yes, we were saying
maybe a mortgage where the interest is on the PPP loan, but the principal could be, so there's a little bit of accounting that's required here, but really I think if you're, let's say you're let's say you're a manufacturer and you have a lot of accounts payable, you're stretching out some suppliers, so then you want to keep them in your good graces, that would be good money to use the EIDL loan money for, is to get all those people caught up, and then also to help cover payroll costs beyond the triple P period, that 8 week period.
Yes, absolutely, and that's exactly what it seems like it's going to be if we're able to utilize both of those loans. So,
but I mean, if you're largely a payroll driven business, like a service business, it could be pretty difficult to find a lot of uses for the EIDL money. Be a little bit more difficult, if we don't have large accounts payable and, where we're paying suppliers or independent contractors, right, that are doing things for us. So yeah, we definitely want to consider that, and we can help with that, how to use these funds for this and use these funds for that. So once we get down that, and what I'm saying is just apply for both of them, and then as we learn more, we will find ways to utilize money. And then with the EIDL, we could just opt not to, I don't think there's a prepayment penalty on there, is there? Right, so let's say they give you 250,000, but we find, we really only need maybe 100,000. Well, then we could, save that 150 and just pay the loan off. So it's fairly cheap money. So I would just work on getting your hands on the cash first, and then we can certainly help you in terms of how to utilize those resources.
Yeah, and how to report it once it's got to be reported for the forgiveness or for the accounting at the end. Keeping good records, but we can sort that out when they give better regulations on that. So, okay. Let's see here. So the next one, I've got to share the slides here. So then we had a few other things in the CARES Act, and we can talk a little about how these interact with the two main loans. So one of these is the employer FICA tax deferral to 2021 and 2022. So what this is they're saying that you can defer your employer FICA, which is your Social Security, for the remainder of 2020, starting 3/27 and going through 12/31. That is based on the due date of that deposit. So whenever that deposit is due is when you could technically start this. And that's the Social Security is 6.2% of the employee's payroll that the employer pays. The rub on this, well, first, what you would do is defer that until the end of 2021 and pay half, and then the next half at the end of 2022. The rub on this is that it says you're not eligible if you get loan forgiveness on a PPP loan, which we assume we will based on the formulas if we get a PPP loan, but nobody really knows that right now. So the question is, do you take advantage of it? And looking more into this and a few other areas, really what they're saying here is you can't double dip. You can't get this, basically a credit for it on your payroll taxes, and get your loan forgiven. So you're only getting one amount forgiven for this payroll that you're paying.
And if you think about it too, like if you have $1 million in payroll, right, for the year, you're talking what the employer's portion of that, maybe somewhere like $62,000, right? 6.2%, assuming nobody's over the FICA limit. So you have $62,000 spread out over, you know, what the remaining, what would it be, 9 months of the year? You know, how much of that is that payroll savings, you know, each month? What would that be, like probably 5 or 6 grand, $6 grand a month or something like that, that you're saving for the rest of the year, which is fine. It's fine. But then, you know, it comes due all of a sudden next December, you know, when all this stuff is long behind us, and then you're reminded by your CPA or your accountant, hey, or your payroll provider, hey, you know what, you owe an extra $30,000, you know, in payroll taxes, you know, come, you know, December 2021. It's, you know, it's just being very mindful of, you know, that what you're deferring, because you're spreading that $62,000 out over, you know, the course of 9 months. Are you going to feel it? Is it going to make a difference? Maybe it will. But just knowing that, you know, it's going to come to roost, you know, in a year and a half, and then again a year after that. So just being prepared for that.
Yeah. Yeah. And I was just thinking, I said no double dipping. Really, this is a different tax than is what's allowed on the PPP, because you can't use the federal employer taxes, but still, I think they're saying you can only get one kind of forgiveness on the payroll stuff.
Right. And we really don't know, you know, like, do we claim this now and then we get the PPP loan, and then it gets, you know, forgiven, and then because we shorted on the payroll tax deposits because we thought we could do this program, and then we get penalty, and this is a poorly designed like addition to the program, in my opinion.
Correct, yeah.
And I just don't see how anyone that is well advised would take advantage of this until we get some clarification on what's going on with this PPP loan.
Correct. I think the most benefit to this, and we'll talk about the next one and some others, is that if you don't decide to utilize any of these loans, say the business is an essential business and doing well, then these are extra things you could do for cash flow and to help out. But yeah, they seem of limited use, and we've talked to our payroll provider, and you know, about how would we utilize this. You know, we've got a payroll coming up if we wanted to utilize this, and you know, they're having to basically redesign their whole system to calculate and not take out this amount and accrue it and figure out how to do it in their system. So they're clamoring for how to do it, and honestly, I'm not sure how many people will utilize it. So the next one here, and I've got a quick question here I'll address. Somebody, Wendy says, sounds like priority should be given to PPP, correct? And yes, that is very big, important point here is that we're saying focus on getting the Paycheck Protection Program loan. Assuming they can get it worked out with the banks, that should be the fastest one to get. So just having that ready to go once they get it figured out, that's where I would focus. This one as well, the 50% payroll credit for businesses. This really applies to the main ones they were trying to hit here were companies that were closed down when they went
hospitality, right? Restaurants,
bars, salons,
hair salons, spas,
probably clothing stores that had to just basically shut down except for maybe some takeout. And the other portion of that is if your company has lost more than 25% of their income in a quarter, like that, I think is the other eligibility item.
Was it 25 or 50%?
Might be 50%.
I think it was 50%, but let me.
Okay, there is a secondary option there that if you've had a really big reduction in your revenue in a quarter, but you would have to prove that separately at a later time. Again, this is one
50% reduction in quarterly receipts. Now, here's where this thing doesn't make any sense whatsoever. So because of which we're going to get to the FMLA and the emergency sick leave thing, but because that came out originally, this is the chain of events that happened. That came out, businesses like restaurants and bars and hair salons and these types of places were essentially told you have to close. Okay, so they had to close. And then they were like, well, we feel like we're vulnerable. You know, we have one client, they have 250 employees they had to lay off. And, if many of them met the FMLA requirements or the emergency sick leave requirements, which we're going to get to in a second, they were going to have to continue to pay those people and then claim a credit on their payroll tax returns. So like from a cash flow standpoint, they were really nervous about having to commit to paying all their employees that met the parameters of collecting the emergency sick leave or the FMLA. So they just laid everyone off to avoid that from happening. So now you have a business where everyone's laid off and you can't operate, so you're generating no revenue. Why in the world would you bring everyone back, pay them 100% in order to get a 50% of their payroll as a payroll tax credit? Like that, there just doesn't, it's like the math doesn't work. So it's like the whole purpose of why this program was designed really for businesses that were impacted that still really aren't allowed to be open.
Correct. And there's an employee thing where if they're under a certain level, they can use this even if the employees are working. And if they're over a certain level, I think it has to be if they're not working at all. So, but it's a very weird thing. And then in the CARES Act also, there was a piece where I believe they added $600 a week to unemployment. So a lot of them are having to make that decision. Well, if some of my servers or employees may be making more on unemployment weekly than if I, bring them back and they don't have their tip income or however that's calculated, or even if they do and they were maybe part-time. So a lot of interactions here make some very tough decisions to make in that regard. And again, this one, based on the CARES Act, we're seeing that you're not eligible for it if you take the Paycheck Protection loan. So, and that credit, let me go back real quick, I believe is only available for that affected period. It's like the 8 or 10 weeks that right now we've been affected. And I know that was just extended to April 30th. So that may change a little. We have developments, it seems, by the hour there. So, do you have anything else on that, Jim?
No.
Okay. Similar, and these came out a couple weeks ago, so I think a lot of people are a little bit familiar with them, but they were probably as confusing, at least when they came out, it was the Family First Coronavirus Act, and it was the emergency paid sick leave and credit, and then there's a FMLA leave and credit. So what these did is mandated that employers under 500 provide paid sick leave and FMLA benefits to their employees. So I'll get to FMLA in a minute, but the paid sick leave is basically that, again, all employers is under 500 are required to provide employees who have been with them for 30 days, the 2 weeks of paid sick leave. And this, they made so that it includes employees that, you know, for some of these companies that initially laid people off and then brought them back on, it still includes those employees, even if there was a break in employment because of being laid off for the virus. This is in addition to any existing company policies. So even if you have an existing company policy for, say, sick leave or PTO, this is provided in addition to that. And there's several reasons they could take this and different kind of pay limits based on how they take it. The top line one is basically if they have the virus or they think they have the virus, or if a doctor tells them, you know, you're really at risk and you have to quarantine, or they're in a location where they just have to actually quarantine. In those cases, I have 2/3 average pay here. In those cases, it's actually full pay up to $511 a day for 2 weeks, if that's the case. So they have to be really like have the virus or think they do, or be in a quarantine situation for those. And that's for 2 weeks. For pretty much anything else, and that ranges from, you know, needing to stay home because their kids are off school, which is pretty much all of Illinois. They don't have childcare, or they just have symptoms similar to the virus symptoms. It's 2/3 of their average pay up to a max of $200 a day that needs to be paid for those 2 weeks. And the way they're offsetting this is that you get a payroll tax credit for the amount paid.
Is that a refundable credit? They call it a refundable credit.
They're calling it refundable. Again, no real guidance or forms yet on how to take it. Went into effect, I believe, yesterday, or April 1st, on April Fool's Day, which was kind of interesting. But
because isn't this really specifically, they specifically call out that it's a credit against the employer's FICA tax?
they do. They say it's a credit against the employer's FICA tax. And one of the trainings that I took, he said specifically 3 times, and he's a very trusted guy that we use a lot, that you could not take it against the federal income tax. However, on the IRS website the same day, they said that you could take this against the federal income tax. And I think what they were saying is that in order to get it sooner, you can use it against that on a deposit. However, there would be a reconciliation down the road where you would kind of have to pay it back with paying your employer taxes on that side. So there's some, as most of this, lack of clarity on how to use this. And we did find that that with this, again, you can't really use it if you're getting the loan forgiveness on the PPP loan. So again, there's an interaction there that does not seem like it's going to cross over if that PPP loan is obtained. They're really limiting the amount that can be forgiven. The other part of that is the expanded FMLA and credit. So Family Medical Leave Act generally has been for employers that are under 50 employees. They took out that requirement. Technically, you can apply to the Department of Labor for an exemption because, you know, if you say, hey, this would affect my business too much and I can't be subject to this or it'll put me out of business. The Department of Labor, I think the one person I was listening to tends to be a pretty humorless department. So he was not sure that they would actually be giving people those kind of exceptions, but nonetheless, assuming you don't get that exception, employers are required to provide this to employees again. FMLA, the Family Medical Leave Act, it's the same reasons as for the sick leave, basically. And again, if just that they have to stay home to take care of a kid who can't go to school, they get 12 weeks of leave and 10 weeks of that is paid. And that one is at a max of up to $200 a day, and it's at 2/3 of their average pay. Same thing, there's a payroll tax credit allowed for this on the employer FICA, but again, it has a limitation in the CARES Act that you may not be able to use it if you're getting loan forgiveness or using that Paycheck Protection Program loan. So as we said, a lot of these became less beneficial once the Paycheck Protection Program loan came about. So that's really the one we're focusing on. So yeah, those are those. And of course, if you have any questions, I see one here. What proof, if any, is for each employee is going to be required for the tax credit for paid sick leave? I would have to look. The original Family Medical Leave Act has some requirements for that. I think it may revert to those. And I can look in the act for that if David could mark that. There may be, getting a doctor's note or something that you're, especially under the first several steps that you have to.
Well, because and because isn't it the expanded FMLA? Is that the one that applies to if you have kids that aren't in school or they have to stay home from school because of school closing? Correct. Yeah. Yeah. So I mean, that one's pretty easy hurdle to get over. I mean.
Yeah, and that could be a sticky one, just asking somebody to prove that, we know the schools are out, but yeah, we can look and see what if they've put anything in there for the proving of those claims. Absolutely.
This whole, we look at, as CPAs, we were actually brought in to the forefront of this very early when they originally, the dialogue started by extending the tax payment due date, right? From April 15th. Obviously, everyone knows we're in the middle of our busy season. I got to say, I would gladly take a regular, what we call tax season around here, a regular tax season, working, making sure we're serving all of our clients and getting their tax returns filed. I would gladly take that over having to wrangle and wrestle through all of this inconsistency and changes, and it's really been it's been a lot to keep up. But early on, it was tax payment due date and tax filing due date. We were like, wow, this is great. We're able to, some of our clients who had large tax liabilities, I mean, they're celebrating, right? It's like, wow, that's great. I get an extra 3 months interest-free, penalty-free. So we went into this thing like really optimistically, like, hey, I'm not saying that this crisis is no joke, but early on we were like, okay, well, at least there's some upside to it, some relief for folks. And then all of this FMLA came out and the emergency sick leave, and then with businesses shutting down, those two programs coupled with, hey, we're talking about closing down salons and restaurants, sent those industries into a panic. And so before they were able to have to deal with the FMLA and the sick leave, there were a lot of layoffs that occurred. Guys go and collect unemployment, right? So then that all happened. And then there was all this talk about the EIDL loans and then the PPP loans and all these other kind of addendums that they have put on. And every step of the way, it all seems to really kind of miss the mark in solving the problem, which is getting cash into business owners' hands so that they can make payroll and keep things going. And so we're really, really hoping in staying in close contact with our banking relationships that the SBA is able to figure this out and get these PPP loans moving along quickly and putting the banks at ease so we can get the money into people's hands. So very important, stay in close contact with your banker. And again, if you're, you don't have a banker, or if your bank doesn't currently offer an SBA, they're not an SBA approved lender, please, feel free to reach out to us. We'll see if we can maybe provide some guidance or recommendations. There's also other resources out there that are like alternative SBA institutions that will deal with this, and that is available on the SBA's website. They have a whole list of other providers, because certain banks are saying we're only working with existing customers, but a lot of banks out there are approved lenders. So
yeah, I've seen a few things too that we haven't gotten into it, but just local grants and certain things. I know one of our clients does catering downtown, and he was applying for like a hospitality grant that was a City of Chicago thing, and working on getting that. So, look for those in your area as well too. Just trying to get anything you can in that respect, I think is the name of the game right now. So.
Well, we want to thank everybody for joining us today. I know your schedules are really busy. I know there's a lot of anxiety out there, a lot of uncertainty. While I feel like, there still is some uncertainty, we're grateful for the opportunity to exchange some ideas, share with you what we know. We've had some excellent questions today and yesterday. Both webinars are very well attended, which speaks volumes to our clients and our business relationships, and we're grateful for all of those. And we promise to use every ounce of our time, our talent, our energy to help each and every one of you, and we're here to do that. And I am very confident that we'll all get through this together, and just stay safe and stay healthy and stay sanitized, as we say here. So. Do you have anything else to add?
No, I guess if there's any last questions, obviously put them through. Let me make sure I didn't miss anything on the next page here. I don't think so. One other thing we had is we're seeing a lot of banks offering, there's two other things really, personal loan deferrals on mortgages and auto payments. Even for businesses, they're doing auto payment deferrals. So check with your bank. They seem to be pretty lenient policies on those. And they're very willing to do them, not grants or anything, but just deferring those loans. Also,
usually about 90 days. It seems to be the standard, right?
Yeah, for business auto loans, that's what I've seen. For personal, I haven't been through one, but I know there are a lot of programs out there, and the government's encouraging them to do that. The other one is that if you've got an SBA 504 loan, there is a program, and it was on that website I looked at, to get a 6-month deferment, not deferment, it's a grant, right?
Yeah, grant.
If you can get it, but I believe the hurdles and the process is a little more onerous for that, and it requires more support. So if you've got a building under a typical SBA 504 loan, look at that program on the SBA site, probably talk to your existing bank, who are probably inundated trying to figure out this PPP thing, but that is another one that would be very helpful, obviously, to businesses.
And there are banks where, if you have commercial real estate with just a conventional loan, bankers are working with them to defer at least the principal portion of those loan payments. And, if you're a red-blooded American, that building's probably leveraged to the hilt, so most of it probably is interest anyway. But you can, get some deferral from the principal portion. So certain banks are deferring only the principal portion for 90 days. Certain are deferring the whole thing and then tacking it on to the end of the loan. So I think, that's going to be on a bank-by-bank basis. And usually there's some application where you have to establish that you've experienced a hardship, or you have tenants that have come to you with maybe, to renegotiate lease terms, or they're asking for some relief and that sort of thing. So, there are things out there, and, it doesn't hurt to ask. So stay in close contact with your bank.
Yep. Okay.
All right. Well, thanks everyone. Enjoy your weekend, and, stay safe. All right. Thank you very much.
Thanks.